I'm convinced that the Federal Reserve is on the verge of injecting a massive amount of liquidity into the financial system, and the M2 money supply is the first place to watch for signs of this movement. That's the central focus of our discussion today, and we're going to unpack all of it. No stress, no pressure. Everyone's welcome here. I'm Nick, and if you're new to the channel, I'm confident you'll want to subscribe by the time this video is over. Recently, Bitwise's Chief Investment Officer shared an insightful post, one that I think really captures the moment. In it, he quoted Bitwise's head of Alpha Strategies, who referred back to a key statement from the Federal Reserve. They've openly said they're prepared to step in and stabilize the markets if needed. That alone is a huge signal. And here's Burr again, with the machines, the market movers, and the bad actors. So what will they do next? That's the million-dollar question when it comes to the Fed. We already know they made headlines on the 11th, stating outright that they are ready to unleash their full capabilities to protect financial stability. That's a big deal. Around the same time, Susan Collins from the Fed echoed this, emphasizing that the central bank is prepared to act with a wide range of tools. This coincided with serious turmoil in the bond markets, creating fear and uncertainty across the board. Right now, based on how everything is lining up, it feels like we're on the brink of a major shift to a pivot from the Federal Reserve. People have been speculating for months that Trump's broader strategy is aimed at pressuring the Fed into pivoting. We'll dig into that more shortly. But first, I want to share a clip from Matt, who recently appeared on Bloomberg and talked about what he called the new currency war, essentially an economic conflict that mirrors the earlier trade war and tariff disputes. He made a bold statement: in this new battleground of monetary devaluation, Bitcoin could be the ultimate winner. That view, coming from a $12 billion asset manager, carries weight. When Bitcoin rises, the rest of the crypto market tends to follow. This reminds me of March 2023, when we saw bank failures trigger panic. At that time, many were unsure of how Bitcoin would respond, but it defied the negative sentiment and surged as confidence in traditional finance crumbled. I believe we're about to see a similar scenario unfold, with heightened conversations around tariffs, currency devaluation, and geopolitical tensions. Crypto, and not just Bitcoin, stands to benefit enormously. I genuinely believe this market is on the verge of a major upswing. Watching how well crypto has held up reinforces that belief. Bitcoin's performance lately has been encouraging, and as long as the equity markets remain somewhat stable, I expect its price to soar even higher. We need to remember how far we've come here from the depths of the pandemic crash, when Bitcoin was under $5,000, to today, where the discussion revolves around $80,000 targets. This isn't the same market anymore. Institutional exposure is far more widespread and balanced. From my perspective, all of this suggests that we are heading toward new all-time highs and beyond once volatility cools down. Now, let's shift from the spot Bitcoin market and take a look at the options market, which has become increasingly relevant. Bitwise launched a covered call strategy in early April, and the response so far has been strong. They're writing calls on high-profile crypto equities like Coinbase, MicroStrategy, and Marathon. This approach essentially turns volatility, which is typically seen as a risker, into a potential profit generator. It's been particularly popular in the MicroStrategy offering, and I think that makes sense given the company's deep crypto exposure. For investors who are bullish on crypto but also want consistent income opportunities, this strategy has a lot of appeal. In a world where traditional currencies are steadily losing purchasing power, crypto, especially Bitcoin, looks like a strategic hedge. That's why I keep coming back to this idea. Bitcoin is poised to come out on top in the ongoing global currency debasement. Watching all of this unfold makes me nervous, yes, especially when thinking about geopolitical tensions with countries like China or the uncertainty around Trump's next move. But above everything, the most glaring takeaway is that the US dollar appears to be on a long-term downward trajectory. The US dollar is no longer the sole reserve currency in the world, and it's becoming increasingly likely that we'll see a multipolar currency system in the future. As global currencies face pressure or decline in value, Bitcoin tends to appreciate, reinforcing its role as a hedge and alternative store of value. Bitcoin performs well during times of uncertainty, particularly when the world is seeking backup assets to protect wealth. In this regard, Bitcoin appears to be one of the most effective investments to navigate the confusion and economic disruption caused by trade wars, tariffs, and the ongoing debasement of fiat currencies. What we are witnessing across major economies of the United States, China, Europe, and others points toward a global shift, setting the stage for a surge in cryptocurrencies. The dollar itself has lost more than 30% of its value in just the past year when measured against the expanding money supply, particularly the M2, which tracks the total liquid money in circulation. I've been closely watching the M2 money supply, especially after seeing insights from Raoul Pal and others who have highlighted the relationship between global M2 supply, Bitcoin, and market cycles, typically with a 12-week lag. This correlation, especially when charted visually as say on TradingView, clearly shows how Bitcoin's movements tend to follow global M2 trends. While the M2 supply's effect on Bitcoin has been slightly delayed, we're nearly caught up, and momentum is building. Since the start of 2025, the US M2 stock has increased by about 0.51%, which may sound modest but actually represents a significant monetary shift of roughly $111 billion added without a pivot from the Federal Reserve or a formal announcement. If that's the case without Fed intervention, imagine what might happen if the Fed does change its stance. We are likely to witness even more liquidity entering the markets, further boosting M2 supply growth. Looking at the broader global picture, we see a similar pattern emerging, tracking M2 from China, the US, the EU, Japan, and Germany provides a comprehensive view of global liquidity. Over the past year, China has taken the lead, substantially expanding its M2 money supply, reaching an all-time high of 326.13 trillion yuan, while the US, Europe, Japan, and Germany have remained relatively flat. History shows that when China aggressively increases its money supply, such as in 2016 and 2020, other major economies tend to follow suit. Based on current patterns and the economic pressures arising from trade imbalances and policy shifts, it seems likely that the US and Europe will soon follow China's lead, potentially initiating their own rounds of quantitative easing. If that happens, a flood of new money would enter the global economy, and a significant portion of that capital is likely to find its way into Bitcoin and other cryptocurrencies. This may sound far-fetched at first, but if you consider the context of the trade wars, tax discussions, and global monetary policy, it actually becomes a very reasonable projection. The stage is being set for a massive influx of liquidity, and Bitcoin stands in prime position to benefit from this worldwide monetary shift, as the traditional financial system once again prepares for coordinated easing.